You are listening to ChartingWealth.com for Monday, the 18th of April, 2016. We always start with IYY. Technically, for the day on Friday, the market was down. This is the total market. That's what IYY represents, an exchange-traded fund, down 0.07%. What do we see on our two-day candles? Well, we actually see the last three two-day candles were up. The Bollinger Bands we are within. But what we do see happening is that even with the market being technically down for the day, we see from the type of candlesticks that we use and we see from our indicators that the derivative oscillator actually gained energy, and we're staying pretty much the same as far as the divergence between the signal line and the MACD itself. What does that mean for us? Well, it means that we're in a continued uptrend, even though the market for the day was down a little bit. If we look at the 4-hour chart, we can see what appears to be a creeping overmove where the market has topped out somewhere around the morning of the 14th of April, and it's continued to lose some of its energy. This is on the short chart. Now, if we look at the short chart with the long chart, if you recall a couple of days ago, we thought the market may be topping out. It was getting very close to crossing over around the 12th, the two-day candle on the 12th. We saw that where it was literally sliding sideways for 1, 2, 3, 4, 5 two-day candles, about 10 trading days. Then the market on the two-day candle on the 14th popped up, and then we see the candle that's starting to form. It's half of the two-day candle, just a one-day move on the 15th, but we continue to see, as far as the action goes, the Heikin Ashi, the type of candlesticks we use, we continue to see there being a bump up in the candle. Now, when we analyze sort of what's happening, it looks very much like when we look at that short chart, we've got a topping out occurring. Now, we don't have that confirmed yet. The 4-hour chart is still in an uptrend, and the two-day chart is still in an uptrend, but we talked over the course, starting at the beginning of this past week, about a topping off of the market with it sliding sideways. It has continued to move up. We have a bit of a divergence. We've had the signal line actually higher. That is, I'm sorry, the MACD actually higher back on the 6th as I analyzed this of April. We actually had the MACD line higher than it is right now, even though the market is higher than it was. What does that mean to us? Well, it means that, again, long in the tooth, we appear to be, according to the charts, approaching a point where the market is slowing down and is going to roll over. Hasn't happened yet. And again, in these crazy days where as long as there's plenty of free money, you never quite know what drives the markets. It makes being able to chart that much more important. Because why? We don't try to get that first move. We follow the trend. We're waiting for the market to roll over in a confirmed down move. Then a pullback on the short chart means it'll go up. Then we'll jump in when it flips over and starts to go down for the second time. We'll help you call that. We'll talk about it. Then you can enter your virtual trades and see how it works for you. It hasn't happened yet. Just be aware. Okay, now we're going to range back. Well, we're already on the two-day chart. We're going to look at the S&P 500. Looks very similar to the total market. We still have a divergence going on. We still have the MACD and the signal line separate from each other, and we still see actually a derivative oscillator that's gaining some energy. Now, the S&P 500 rather, was down 0.11%. Total market down 0.07% for the day. If we look at, and again, we're looking at the two-day chart, if we look at the 4-hour chart, we see that, again, we've had somewhat of a topping out around the 14th, and then the market opened lower on the 15th and then closed lower, again down 0.11%, but derivative oscillator still positive, and the MACD is still above the signal line. No crossover going down yet, still above the 2-day trend line, still nicely above that. So we'll continue to watch. We'll continue to wait. We've not had a signal yet, but we're always trying to anticipate, aren't we? And again, we don't fire the trigger until we really have the animal in sight and we know we're going for a kill shot, or we feel very, very certain. Okay, now we're going to range back out. Hope you like my analogy of hunting. Okay, go back out to the 2-day trend, and we're looking at the Qs, which is what? The NASDAQ 100. That's the technology stocks. They were down 0.25% for the day. Again, our 2-day candle is showing a green up box. And again, that's the Hikinashi, the type of candlesticks we like to use. You can read about them on the website. And again, it's spelled HEIKEN-ASHI. It's formatted differently than the open, high, close, and low that you see on the typical candlesticks. One reason we like it is it helps us see price movement in a so much clearer manner as far as acceleration, decelerations. Now, what do we see going on the Qs? We've still got a separation between the MACD and the signal line. Our derivative oscillator is losing energy, but is still positive. So we still have confirmed up moves on our 2-day chart. Still got room for up movement as far as the Bollinger Bands go. Now let's look at the 4-hour chart and see what we see. We see again a topping off having occurred. We don't have a crossover yet. Still have a lot of energy in the derivative oscillator. We've not crossed over yet going down on the MACD. We'll continue to monitor. Still above the 2-day trend line. Now, lastly, we're going to range back out to our 2-day chart, and we're going to take a look at gold, which was up 0.69% for the day. Gold is still in a confirmed down move on the 2-day chart. It is losing a lot of that downward momentum. We do see two-day down candles starting back on the 14th, and then the first half of that new candle forming on Friday. If we backtrack and look at the 4-hour chart for the intraday moves, we see that gold was moving up in the morning and even more in the afternoon, although it still crossed over going down. It moved down substantially over the prior 2 days, that's Wednesday and Thursday, and then really slid sideways. The move up in gold was not even where the afternoon move down in gold occurred back on Thursday. So the moves up on Friday were again 0.69%, not tracking the amount of down movement that we saw on our candlesticks. So we are technically down move on the short chart on gold, and gold is in a confirmed down move on the long chart. That is where we are. We'll continue to watch, getting ready to record as soon as we finish this program. We're going to prepare and put out for you our weekly review and forecast with the things that happened this past week that affected the market, what we see potentially affecting the market in the coming week as far as releases, economic news, those kinds of things. And we'll be looking at the weekly and the daily charts. So we appreciate you being with us. If you don't already get our newsletter, go to chartingwealth.com, sign up for us. Follow us on Facebook, Twitter, Instagram, YouTube. If you want to support us, we're not asking for money. We would appreciate it if you would go to iTunes. Subscribe if you'd like to get the podcast. Whatever you do, would you be kind enough to give us a 5-star rating and say something nice about us? Hopefully you have nice things to say. Thanks so much. God bless. Hope that your trading week starts off very, very